Hello, and welcome to this week's Query of the Week. So this week I'm dealing with my name is John Murphy. I work on the practice support and the tax and legal section of OmniPro. This week I'm going to look at just consolidation. So we got a query in when we were advising clients on a consolidation where there was a disposal of a subsidiary during the year. So I suppose the question was, I have a disposal of a subsidiary during the year. How do I account for this under FRS 102? So I suppose where you're looking for to answer that question, you're looking at the section 9 of FRS 102, which deals with, consolidation generally. Effectively, what the rule says in section 9 is that, for your disposal, you have to consolidate the figures from the start of the period to the date of disposal. So after the date of disposal, the figure, it's not your company, so it's gone from that point in time. So, it means effectively, in, I suppose, practical terms, it means a lot of times, that's that subsidiary that was, it's probably doing a full year's trial balance. So it means that you would have to go back and you'll have to go get the results from, let's say, if it was December year end, that subsidiary, and you dispose of it in September, you'd have to get the results from January to September effectively to just put into your consolidated financial statements. So for all the transactions within the group, between that company, between 1st January to 30 September, they will all need to be eliminated. So intercompany sales, intercompany purchases during that day, they're all eliminated on consolidation. Likewise, if there's a dividend from the subsidiary to the parent, they will all be eliminated on consolidation to have an ill effect. Then in the consolidated account, over the years since you acquired that subsidiary, you will have accumulated the profit and loss reserves in the group accounts because you've been making profit since you got it there. And you'll have assets on your balance sheet, your consolidated balance sheet from last year, for that subsidiary. So you'll have to determine, well, look, what were my assets on the balance sheet at the date of disposal, so that you can put a profit and loss and disposal in the consolidated financial statements. So that's important that you do that exercise as well. So I suppose that's the accounting for the results that you need to show in your financial statements. You will also need to deal with, the disclosures in FRS 102 in relation to related parties. So the question we get asked in relation to this, well, look, what disposals do we put in our accounts then if we had it for 3 quarters a year in this exact example, and we didn't have it for the last quarter. So effectively, as I said, they'll all eliminate in the first 9 months of the year because you'll have eliminated them in your consolidation. For the transaction after the 30th of April, there won't need to be any disclosures of the transactions between the two companies because obviously it's outside the group, unless obviously it's a joint venture or an associate at that point in time, in which case there will be disclosures for the period from 30th September, 31st December, assuming that's your consolidated financial statements. Just while I'm on another point in relation to it, just say there's separate financial statements for other subsidiaries in the group, and they've had transactions with this subsidiary that is disposed of. For that company in doing their entity set of financial statements, or likewise the parent entity set of financial statements, the disclosure will effectively be, if there's transaction between that subsidiary that's disposed of and this subsidiary, and they're within the period, which 1st January to 30 September, there's no need disclosure because they are 100% owned within the group. And after the 30 September to 31st December, depending on the way it's a transaction, if it's no longer a subsidiary at all, well, then there is no more disclosure to be made. Obviously, in that case, in your comparative view, you'll have amounts due from group companies in your creditors note or debtors note, potentially whichever way it's going. But you might have balances owed from this company this subsidiary that are owed to this subsidiary that was disposed of. They wouldn't obviously come within the amounts due or from group companies in your creditors or debtors note. They would just go into, maybe normal trade debtors, trade creditors as applicable in relation to it. So I suppose give you a kind of a taste of the various disclosures if that type of transaction occurs.